Yo, what's up traders? Welcome to a new video. In this video I'll be showing you a amazing 1-minute crypto scalping trading strategy. Without further ado, let's get started. Alright, I'm looking at the Bitcoin chart, the Bitcoin versus the USDT, and I'm looking at the 1-minute time frame, and I'm using TradingView as a charting platform. For this trading strategy, we will be using 3 indicators. So first we go to the indicator tab and we're looking for the exponential moving average, and you click twice on this one over here, the moving average exponential. You click twice. And then we are looking for the absolute strength histogram, and make sure to use the G-Man trading. So click on this one over here. Then we need to adjust it. First we are looking at the exponential moving average. We need a 200 length instead of a 9, and I use the blue color. And we are looking at the 50 exponential moving average. So yeah, again, instead of a 9, use a 50 length, and I change the color to red. Then we drop down to the absolute strength histogram. I just leave the default settings regarding style and also regarding the input, so I do not change anything over here, just default. Then we are looking at the charts. So let me explain you the trading rules. So first of all, in order to take a buy trade, we need the price to be above the 200 and the 50 exponential moving average. So if the 50 is above the 200, then we're only looking for buy opportunities. When the 50 is below the 200 exponential moving average, then we're only looking for sell opportunities. So when we look at this over here, let me zoom in a little bit. Over here we see that the price is above the 200 exponential moving average, and it is still below the 50, so we do not take anything. But over here we see that the price is above the 50 level and also the 200, and we drop down and we see over here that the blue line is above the orange line, which means that we are going to take a buy trade, because that is our entry trigger. So we grab our tool, we place our stop loss below the latest low, and we are aiming for a 1.5 to 1 risk reward ratio trade, or even a 2 to 1 if you are really confident in what you are doing. So yeah, this is a nice winning trade. And we also have, let me show you another opportunity. Yeah, so this is something that you really have to take in mind. Well, first let me show you this one over here. We see that the price is above the 50 level and the 200, so we are looking for buy opportunities. We wait for our absolute strength histogram to show a buy trigger entry. That's here, a buy signal. We grab our tool, place our stop loss below the latest low, a few pips, and then, or points if you're trading crypto, and then we are aiming for a 1.5 or even a 1 to 1 if you're really conservative. But in this case, this was a nice 3 to 1 risk reward ratio trade. But let me show you something that I really want to address, because we are not going to take every single order. There is one condition. Over here we have the prices above the 50 and the 200 exponential moving average. We drop down and we see over here that the blue line crossed the orange line, and yeah, the blue line, or the blue bar, also crossed the red bar. So we take the trade. But the thing is, when the price is far away of the 50 and also the 200 exponential moving average, it's likely that price won't reach any higher anymore, not on a short term. So that is also something that you can see over here. Even though the price is above the 50 and the 200, it's too high. It's simply too high. And we also see a large impulse candle, so it's too high, and there's a chance that it will reverse soon, and that's also the case. In this example, our target gets hit at 0.86%. So I hope that you understand what I mean. Let me show you a sell signal. Over here we see a dead cross, which means that the 50 exponential moving average is below the 200. And yeah, that means that we're only looking for sell opportunities. From this moment, we look for a nice opportunity that our absolute strength histogram indicator shows us. Over here we see that the price is going to the upside, but about here we see that it is close to the 200 exponential moving average and the 50. So about here we grab our tool, we see a red bar, and we also see that the orange line is above the blue line. We grab our tool, we place our stop loss, and we use a 1.5 to 1 risk reward ratio, or even, well, that was a really good trade. This was a over a, what is it, 3, almost 4. Yeah, I think it's more than that. Let me show you about here, because yeah, it's reached about there. There was a over a 4.5 risk reward ratio trade, which was really great. So that is something you have to take into account, that you can take trades, but make sure that it is near the 50 exponential moving average level. And the last example over here, we see that the price is below the 200 and the 50. We grab our, we drop down, we look at the absolute strength histogram. Over here we see a orange line and a blue line. Like I said, we grab the tool, the short tool, and then we place our stop loss a few pips or few points above the latest high, which is here. And then we're aiming for a 1.5 to 1. That's about here. It was a nice trade, but as you can see, it even went lower. So this is a 5 to 1 risk reward ratio trade, which is really good, of course. So yeah, if you enjoyed this video, if you have learned something new, just give this video a like, subscribe, and also let me know down below in the comments what kind of videos you want to see next. I see you in the next video.